Good afternoon, and thank you for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to introduce Clean Air Metals to you today, a critical minerals explorer in Ontario. For the webinar today, we have with us Jim Gallagher, President and CEO, and Mike Garbutt, COO. Jim and Mike will provide an introduction to the company, including an overview of activities planned for its Thunder Bay North project. After the presentation, we'll take your questions live. Please send us your questions via the chat box and we'll get through as many as we can. Before we get started, I do need to mention the fine print. For Clean Air Metals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Clean Air Metals corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. With that, I'll hand it over to you, Jim and Mike. Please take it away.
Thank you. Good afternoon, everyone. Thank you, Alina. And Mike and I look forward to stepping you through a little bit of the history, current activities, and some of the planned activities moving forward for Clean Air Metals. Alina did a good job of introducing the forward-looking statement, so we'll jump right into it. We're very proud of the relationships we have established with the approximate First Nations. We are on the traditional territory of 3 First Nations in the Thunder Bay region, Red Rock Indian Band, BZA, and Fort William First Nation, which actually makes up a good portion of the city of Thunder Bay. We started with an MOU back in 2021, and in fact, we also issued warrants in the company to the 3 First Nations who formed a joint venture called Aki Resources. We have been paying them a modest amount of our exploration dollars since we signed the exploration agreement in 2022, and they continue to have interest in future equity ownership. It is something that all levels of government are promoting in terms of the right path to reconciliation. They have been very good partners, very supportive in terms of writing letters of support to the government in our permitting profile. We also consult with KZA, or Gull Bay First Nation, which is at the very top of the screen that you see. They are treaty rights holders who have exercise rights in the region, and we are in the process of having ongoing discussions with them. So we have maintained very positive relationships, and we believe that's fundamental to the success of any mining company, not only in Canada, certainly in Ontario moving forward. We're going to touch on a couple of things. Even though there are 6 critical minerals, 6 recoverable minerals, 4 of them critical minerals in this deposit, that being platinum, palladium, copper, nickel, and a little gold and silver. We think this operation potentially could be the only primary platinum mine outside of South Africa a few years down the road. And we'll go through the reasons why we think platinum is the metal to pay attention to. We do have a very well beaten up resource of 14 million indicated tons, drill indicated, and equivalent of about 2.4 million platinum equivalent ounces. We have a stable jurisdiction. I'm going to touch on that in the very next slide on our location. We have exposure, again, not only to the PGE market, but the copper market, and we'll show the revenue potential coming from copper for this deposit. And we have, over the last several months, enhanced and developed a new strategy to take advantage of this rather depressed market for juniors and pick up some other assets, and we'll talk about our progress down that path as well. So location-wise, we are literally 45 minutes north of the city of Thunder Bay. If you look at the inset, the green is our claim structure, 90 kilometers up Highway 527, which is a paved provincial highway that cuts through our claims, is the Impala Canada Lac des Îles deposit. That is my old stomping grounds. I was the CEO of North American Palladium for several years up until the sale to Impala. The South Africans picked that up towards the end of 2019. And shortly thereafter, I got recruited into this deal, and I'll touch on that a little bit further. We have a major power line coming through the other corner of our claim structure. And again, this will be a drive-in, drive-out type of operation when it gets built down the road from the city of Thunder Bay, which is obviously a strong mining town. So all the infrastructure, supporting infrastructure, means relatively low capital cost and relatively low risk. So these, the history is these were two separate deposits in different hands. There's two twin conduits here, approximately 2.5 kilometers apart. We're strong believers they come from the same genesis and the same time period and formed from the same feeder system at depth. The current deposit used to be in the hands of two predecessor companies, Magna Resources, which was acquired a decade more ago by Panoramic of Australia. They did a total of 750 drill holes, and if your screen resolution is good enough, you can see the black little lines and the surface dots. Very well drilled deposit down to approximately 500 meters in depth, and over 8 million tons of indicated resource on that. The escape deposit was actually in the hands of Rio Tinto, and they only put a few holes in it, discovered what we'll call the high-grade zone, and we'll show in an upcoming slide, and 5.8 million tons. Most of that resource, all of that resource was in fact drilled by Clean Air Metals. There was no published resource on escape previously. And Current did have a historical resource more as an open pit, and the original owners took an open pit approach to this. And as you'll see in upcoming slides, there's issues with that. This is a fairly high variable grade and lots of high grade intersections, and it does subcrop under a lake. We really thought from day one when I got involved with this project in 2020 at the formation of Clean Air Metals that this really was better suited as an underground deposit. A fellow by the name of Stephen Stairs of Benton Resources pulled these two deposits together. He had the relationships with both companies. He looked for a management team. We found a shell company in Toronto to convert into Clean Air Metals. And we came to trade in 2024, in May of 2024, as Clean Air Metals, and have advanced the deposit since then. So there is high grade, as I mentioned, in this deposit. The Lac des Îles mine further north, 90 kilometers north, is a fairly large monolithic deposit with very consistent grade. This deposit has very high grade areas and has a very large mineral envelope, all of which does not make it into the resource statement given the cutoff grade. And part of the reason we felt this was more amenable to an underground approach is you can be more selective. These are the very best two intersections in the escape deposit and in the Beaver Lake zone, which is part of the current deposit. 2.6 meters, relatively narrow as a high-grade massive sulfide intersection, but almost 100 grams platinum palladium and almost 15% combined copper and nickel. So stunning grades in any deposit anywhere in the world. Escape South, we did drill this, the Beaver Lake zone intersection drilled by our predecessor companies. Escape South, we drilled this in 2021. Only 0.7 meters, but 20 grams platinum palladium and almost 7.5% copper and nickel. So the system can make massive sulfides. These are high energy magma intrusions that traveled at a fairly high rate of speed. Most of the mineralization is either net textured or disseminated, but when they do get a chance to slow down, they can settle into massive sulfides. And this is just an example of, there is some very nice grade at decent intersection widths. Just for context, because especially when you have multiple metals, it gets hard to figure out what's good grade and what's low grade and what's high grade. The Lactazil deposit basically runs about 2 grams palladium through the mill. And high grade at Lactazil tends to be 3 grams or better. So you can see here several intersections. The Lactazil deposit does not have the byproduct credits that this deposit does. It's about 90% revenue from from palladium. And this deposit has a 1-to-1 ratio approximately of platinum to palladium. And as you'll see in an upcoming slide, very good copper values and decent nickel values. So some pretty good intersections here in the escape deposit, the high grade zone. There's some 90, 100, 110 meter intersections, some very good grade, 3.5, 4 gram material, plus decent copper and nickel grades on top of that. And the current deposit has some of these really stunning, 40 meter intersections, 9 and 10 gram platinum palladium. And 1.5% nickel and copper. So just the nickel copper grades alone are interesting, and certainly the platinum palladium grades really take it over the top here. So the bulk of this deposit, both of these conduits are reasonably well drilled, obviously to an indicated level down to a 500 meter approximately depth. The predecessor companies, again, were really thinking more open pit approach. And they are open at depth, and of course with the magmatic intrusions, they did come from depth. There is the escape fault system that cuts across both deposits, and a future exploration goal is to get on the other side of that fault system and drill the down plunge. We have quite a good magnetic anomaly. It's already 2.5 kilometers in strike length. It does follow what would be the expected kind of strike length along the down plunge section. So this is an area for future exploration opportunity. And just looking close, again, this is the escape deposit in the section view. You can see the drill holes through the higher grade deposit. And again, open down plunge, good place to look. And I think as we move forward here later this year, we'll evaluate based on cash available. And we do have cash in the bank, just over $5.5 million as we speak. But we're watching our cash, and we'll talk about that. So this is a future down plunge drill hole potential, initially potentially 2 to 3 holes to test the down plunge theory. And of course, then it would require significantly more drilling afterwards. But again, open below 500 meters, which isn't too deep. So I'm going to spend just one slide here talking about platinum. And as I said up front, why platinum is maybe a metal everybody should pay attention to. Platinum has a critical role in this green energy revolution. So there's lots of talk about the hydrogen economy. I'm not convinced that most politicians who support it even understand fully what the hydrogen economy is. But battery metals tend to consume a lot of the oxygen. It's only about 10% of the carbon issue in the world is due to the auto market. And the significant contributors from the shipping industry, the airline industry, major heavy industries, cement, steel, etc., do not easily have a solution that certainly involves batteries or is fully electrifiable. And so one of the only solutions that makes sense is hydrogen. And green hydrogen is produced from solar power or wind power or hydropower. And it enables those energy sources to be used 100% of the time. So if the wind's blowing, or the sun shining, you're able to make hydrogen. And the little beaker in the middle with the anode and the cathode it's as simple as running current through water, and it produces hydrogen on one side and oxygen on the other side. And when you do this on an industrial scale, they coat the anode and cathode with a very thin microscopic layer of platinum because it enhances the process to produce more hydrogen, but it also is very, very corrosion resistant with that. And I use the analogy of 30 plus years ago, every spark plug in every automobile switched to a platinum coated tip, and nobody worries about changing spark plugs anymore. That's one of the main reasons why platinum is used in this environment. The other part in the hydrogen fuel cell, that thin green membrane down the middle, that they essentially push hydrogen through and produces water and frees up electrons to produce electricity. That is also very heavily coated with PGEs, primarily platinum. So huge potential market here. The backdrop is there are only 6 million ounces of primary mining a year of platinum, and 75% of that comes from South Africa. So lots of risk with South African mining, depth, infrastructure, power issues, brownouts. So at risk supply side and a growing demand side against the backdrop of all the other industrial uses of platinum. So really a good positive story, and I really invite investors to do their own homework and really take a hard look at the platinum connection to the green hydrogen economy. So I'm going to flip this over to Mike for the next couple of slides. Mike did a recent exercise at near current prices of showing the revenue potential here.
Yeah, thanks, Jim. So one of the big benefits of this deposit is obviously multi-commodity. And as Jim said earlier, we do have 6 payable metals, platinum, palladium, copper, nickel, gold, and not shown on here is silver, which would be a fairly small silver. But nonetheless, what it does for you, you could ride out some changes in commodity prices through it being multi-commodity. And as it sits, and maybe not even today, this was done maybe 2 months ago, but as you could see, roughly half of the revenue, expected future revenue or the value in this deposit is from platinum and palladium. And then 31% is copper. And today, with copper pushing all-time highs, we would expect to see that maybe in the mid-30s, delivering in terms of the percentage of value for this deposit. And we do have a portion of nickel, and I'll speak to the recoveries in an upcoming slide. But nickel is 16% of the deposit. So multi-commodity and able to withstand fluctuations in commodity prices. So we like to think of the Thunder Bay North deposit as, we're certainly not an early exploration play here, and we have a solid foundation of since the inception of Clean Air Metals in 2020, solid foundation of good technical work, and I'll go over 4 of the things on here. So the first and foremost is our resource, and as Jim said, this thing was beaten up pretty severely. So we're very confident in this current resource statement. And with all the drilling done historically on the 2 deposits, Clean Air Metals came in, did a significant amount of drilling on the Escape deposit to bring that to an indicated level, which culminated in a resource statement in the middle of 2023 done by SLR. The second item, we've done a lot of work and carried on a lot of the work, continuing the environmental baseline data collection and studies. And the second one is, we were on the path to developing this deposit, and we enlisted Stantec to do some work looking at permitting. And the one thing about this deposit, we have a fairly small footprint, not a huge impact, certainly will not have a federal EA imposed upon us. We're under most of those benchmarks. And in fact, we probably need a couple class EAs, so really do not feel that permitting will be a significant problem for this site. Third one, and I do have a slide on this. Well, I'll speak to a bit about our metallurgical test program. We went through 2 phases of metallurgical test programs, one to support a PEA and the other one to support a pre-feasibility study. That was the testing. Metallurgical test program was completed in early 2023. And then the last one I'll also talk about, we've done some mine design work, and we're very pleased and don't feel that's a huge risk. So moving forward, where does that leave us today? Jim will speak to part of our strategy. We're doing work looking at different assets in the region for possible acquisition. We have in our capability to do a phase 1 down plunge exploration, as Jim talked to, for this year. And then looking into the future is an update to the PEA, maybe some regional processing synergies with regional mills, and also, with success in the phase 1 drill program, we'd be looking at a phase 2 down plunge test program. So on the metallurgy, really quick, very happy with the results. And as you can see, we got some really good recoveries. Platinum over 80%, palladium in the high 80s, copper mid 90s, nickel at 57%, and 40% of this deposit, the nickel's tied up in silicates, which is pretty tough to recover. So 57 is actually a very good performance. Gold, mid 80s, and silver just under 70. But what it does, we've been able to prove that we could create 2 concentrates here. Really good copper concentrate, clean copper around 22.4, as you can see on here, percent copper, and then a PGE/nickel concentrate with 50 grams per ton of combined platinum palladium and 4% nickel. As part of this program, we spoke to a few smelters, got some indicative terms, and there was a lot of interest in this material, and we're very happy with the results. And then on the mining side, this deposit's near surface, the best material, the top picture is the current deposit, and some of the best material in the larger widths are within 70 meters of surface. So within 4 months of an access, you're at the best part of the deposit, and you can ramp up pretty quick. So from an upfront capital standpoint, there's very little risk in this project. The deposit plunges at about 15%, which is essentially a ramp could follow that and carry on with blast hole open stoping, which is very simple, highly executable, low cost, high productivity. And then part of the development plan would be to develop towards the escape deposit. You could see the ramp on the left-hand side of that upper picture, which carries on to the escape about 2.5 kilometers away. And you're right into the better part of the escape deposits, which is, we call it the escape high grade zone. So, we see, 2,500 to 3,500 ton a day operation here, and low risk, very good ground conditions.
So before I talk to this slide, I do see some questions popping up on the side from Elaine, and I am going to address them because they're good questions before I move off the actual Thunder Bay North project. Is this an analog to Norilsk? Well, in fact, it is. Obviously, we don't have the same size and scale, certainly not yet. But these are chonoliths, is the geological term. Intruded, similar to some of the structures that are at Norilsk, and a lot of the massive sulfides that are a huge feature of Norilsk, which we only have in small amounts right now, are at depth and under the deposit. So the down plunge is kind of critical for us to explore that further, but that's going to take some time. There is rhodium in the deposit. We can recover it at the mill, but we have not been able to get to a level, and don't expect to, that it'll become a payable at a smelter, so it doesn't show in the revenue stream. And I'll speak to do you have the people to build it at a final slide that's coming up here. So that's the Thunder Bay North. Really, we did plan to build this. We did a PEA 2 years ago. We did have a slight adjustment when we did the updated resource. We lost a few ounces on the current deposit. but we have a pretty solid resource statement today. When we hired Mike 2.5 years ago, Mike was the guy that was going to get this thing built. So we were very, very focused on moving this project ahead. Mike and I both, through different timelines, come through the Sudbury camp, the Falconbridge system. I left Falconbridge when it was still Falconbridge before Strata Glencore took it over. And the last two mines I was involved with were on project builds in Sudbury were 13.5 million tons, so almost identical size to this deposit. So this is a nice mid-size potential mining operation. And Mike, in an upcoming slide, we'll talk to Mike's experience as well. So we feel that project's ready to go, but over the last 2 years, price of palladium, for instance, has come down by almost $1,200 an ounce or more, and the price deck really took quite a hammer to the economics. So today, as the prices have come back, and even last week, platinum and palladium, come well above $1,000 again. We're getting to the break-even, slightly better than break-even point of the project. We're pretty comfortable here with the expected price appreciation coming from critical minerals, that we're going to be back to a build-ready project, hopefully in a year or two as the market recovers here. So this has been a tough market. We're another one of the juniors that over the course of the last 2 years, every time we put out good drill results, and for us it was primarily on the Escape deposit because that's where we were doing the bulk of the drilling, improved up almost 6 million tons of decent grade material. Every press release would drive the price down, and we're not the only junior that suffered through that. So late last year we took a look at our share value, which had dipped below 5 cents, and questioned the path forward a little bit in the ability to raise money. And we ran a strategic process to see if we could find a larger strategic that was interested in stepping into a platinum palladium play at that point in time. What we discovered was there's some opportunistic players out there that were really absolute bargain hunters, looking for the cash in the company, which was close to $7 million at that time. And the board and management just decided that none of those offers were compelling enough, that we had a better asset here. During that process, we were also doing our own research on other platinum palladium assets throughout northwestern Ontario, northern Ontario as well. And there is a significant number of them. Many of them are quite, I'll call them distressed. There are historical resources that had previously been published. There are drill intersected deposits that show promise but have never had a resource statement done on them. And there are prospector finds that have the right geology, the right rocks, and some indicator minerals. So all of these little dots are potential PGE deposits throughout northwestern Ontario that you can see on this map. Some of the yellow boxes are historical operations or ones with actual published resources on them. So there is probably nowhere in the world that's better to explore for PGE deposits than in northwestern Ontario. And I include South Africa in that comment, given the depth of most of the operations and the many challenges in South Africa. So we basically like to use the term turning adversity to opportunity. We are in discussions with several of these shortlisted properties, looking at merging or taking over some of these deposits for a very low upfront cash, long-term commitment relationship. And some of those discussions are advanced. There's absolutely no guarantee that any of them will move forward. But essentially, I think the key point that we've discovered is that we feel that we can buy ounces much, much cheaper than we can drill ounces today. And unfortunately, in the market as it is, even putting out a good drill hole does not see the appropriate market response as it once did. So we strongly feel that building a portfolio of assets in time, I think, at the bottom of the market. And once the price turns, and again, nice little movement last week in the prices for copper, platinum, and palladium, we think that will be attractive as an asset for investors, as a company that has several deposits that have significant upside potential in a better price environment. And so that's a huge part of our strategy moving forward. We've spent a lot of time looking at that. And we are reasonably positive that we'll be able to close some deals here within the next 4 to 6 months. So that's a big part of our strategy moving forward here. So a question been asked about the team. Look, I have the background of a mine operator, a project builder, spent 23 years with Falconbridge, was involved with a couple of projects, as I say, 2 mines about the same size range that Thunder Bay North would be, and then moved on to Hatch, the engineering company, doing major projects throughout Canada and the world, in fact, and then moved on to North American Palladium, where I was the CEO, and that was a turnaround story. So myself, I have the experience. Mike, maybe I'll let you just talk briefly about your experience as well.
Yeah. So, prior to this, spent some time at the IAMGOLD Côté Gold project. My background is mining engineering, but, did spend time in projects, also mine operations, a general manager with KGHM, and did a little stint in consulting with Stantec for a period of about 5 years. So, came through operations, projects, and joined Clean Air Metals.
So we also have Chris Toodle, our VP of Sustainability and Community Relations. Chris has a long history with the Thunder Bay North project through a consultant that he previously worked for. He did a lot of the initial work for the predecessor companies on the environmental and permitting side. His connection with the First Nations, I think, is second to none. And so he's a huge asset to the team. The newest member of our team, we just had a change in our VP of Exploration. Lionel Dejean came available from the Lac des Îles, Impala, Canada operation. And he's got, number one, he's very focused on PGEs, which quite frankly, there aren't a lot of geologists that say that. And he's got tremendous knowledge of Northwestern Ontario. He worked with me when I was the CEO of Lac des Îles, North American Palladium. Our newest board member, David Peck, Dr. David Peck, he and Lionel have worked together for a long time as well. So I think we've got the right combination, the right team members, and Lionel's been very successful with the application of certain geophysical techniques for finding deeper deposits, which he did both at Lac des Îles, Sunday Lake deposit, which is in the region, et cetera. So this is a team that can build the asset. And, the only challenge, and it's in just being honest, in the current market, it is very difficult for mining companies, juniors, to raise the money to move forward. So we're both, to answer the question, the inevitable question, we are on a path to move forward and build, and we have the capability to build. But that may, in fact, be selling the deposits once we prove enough value to those with larger pockets and deeper pockets, because it is difficult to raise money in this market. So capital structure of the company, shares outstanding, 225 million shares. Market cap has been floating price, between 11 and 13 million dollars for the last couple of months. Warrants outstanding, you can see here. Working capital somewhere in the range of 5.5 million dollars today. That's all hard dollars. We went very quiet last year. We had to reduce the exploration team. We did pay some severance packages out, obviously, which impacted our cost structure last year, but we're in a better shape now. And so we've been very closely managing and monitoring our cash. You can see the shareholder position. Benton, again, pulled this deal together, put some of their own money into it, still own 11% today. We've hung on to some institutional investors, but we lost quite a few, obviously, when we got below 10 cents a share. And retail and management, myself, got quite a few shares here. So that's the capital structure. And so in summary, as a base case, we have the Thunder Bay North project. It's very well drilled, down to 500 meters. It forms the basis of a relatively simple, quick to get to underground ramp access mine. We believe it's quite buildable, no red flag risk issues. And sorry. I've lost the screen here. Just give me a chance to get back here. Yeah, sorry. We're going to grow the resource base regionally, as we talked about, and we think there's significant potential there. And we also have this very strong relationship and our very proactive approach with our First Nations. So we think we're on the cusp. We're at the bottom of the market, and we think there's a pretty clear path forward as the metal prices start to improve here. So I'll flip it back to our moderator for questions, and we'll go from there.
All right. Thanks a lot, Jim and Mike. Just as a reminder to our audience, you can type your questions into the chat box at any time. So, Jim, I know you mentioned a couple that already came in, but there's one here on the drill program. Can you expand on that? How much do you plan to spend? Also, has there ever been any drilling to find that feeder zone in the past?
Yeah, so we really have done next to no drilling below 500 meters, as I stated. We have a program laid out of 2 to 3 holes to kind of test the down plunge. Being very honest, that's about $1 million program. That's an expectation that we would raise some flow through shares, hopefully on the charity side, in order to do that. And we may execute that this summer, later in the fall. But as I say, it's a tough market both to raise money in right now. It's expensive at 5 cents a share, 5.5 cents a share. And depending on how we progress on the other part of our strategy of acquiring ounces as opposed to drilling ounces, we're going through that evaluation on what the priority is at this point in time. So, about $1 million program plan for the down plunge. Timing still to be determined.
Okay, great. Do you have any royalties on the claims?
Yeah, there's a mixed bag of royalties on the claims. It averages about, with buybacks, it averages, let's call it around 4%. And you need a map. We have it in another version of this presentation from the original prospectors to Rio Tinto over on escape only. So it's a kind of a mixed bag across the property, but it averages between 3.5% and 4%, and there is some buyback opportunity there.
Okay. I know it's early, but have you had any discussions or any communication with the government, any government support?
Yeah, we have lots of discussions with the government, with the politicians. We had George Perry in our office. He's the Minister of Mines in Ontario. There actually is not a lot of money available, despite what it may appear in the press. We did apply for the early exploration grant, and were accepted, except we were accepted late enough that they had already run out of money. So that's some of the things that go on with the government. And most of the money that's even in the federal budget, and I did talk about the latest federal budget, did have significant money. I'm going to qualify that in a minute. Did have money to help First Nations on reconciliation and First Nations buy into projects, but they tend to be focused on construction-ready projects. and at that final stage of building the project. So there really isn't a whole lot kind of helping the upfront junior miners at this point in time. And so that's a bit of a challenge. And I just do the comparison when auto plants are attracting billions of dollars each in investment, the entire mining industry gets hundreds of millions spread out across the country. So it's not a level playing field in the critical mineral space at this point in time.
Okay. Next question. What will it take to attract institutional investors?
Yeah, I think two things. We have had feedback that we don't have the scale as a 2.5 million ounce deposit. That's not quite big enough for investors. Look, there's been lots of discussion about what's the kind of trading activity that has driven lots of small caps, not just junior mining, but certainly junior mining fits in there, down to these very low levels. And I think, quite frankly, despite all the noise about critical minerals, the background issues in the world with multiple wars and threats of recession, slowing economy, inflation, metal prices really are not high enough to drive the huge investment yet. We're starting to see that turn. We certainly saw it turn over the last several weeks with gold. Copper's coming along nicely, and a little bit of movement in platinum palladium last week, I think due to some of the threats further with China and Russia. So we're pretty bullish that we are going to. I've been in this business now for over 40 years. I've lived through probably 3 major metal up cycles. And when they happen, they always happen quick and they take off. And we think that's what's going to bring investors back to the mining space, because it isn't just institutional that have kind of flown the coop. A lot of retail investors have left the space as well. So it's a bit of a tough time, and which is why we've kind of modified our strategy and really are convinced that we can acquire ounces cheaper than we can drill them today. So.
Okay. Are you talking to any potential buyers? What's their level of interest?
Yeah, well, I couldn't reveal it if we were talking to buyers. So for the whole company, the answer is no. As I said, we did run a strategic process and we did have interest in the company at that time, but it was not. It didn't reflect the value. There's almost $145 million have been invested in these 2 deposits. That is not lost money. It takes a lot of money to drill off a deposit to an indicated level. We have probably 850 to 900 drill holes throughout the deposit. We've done lots of significant technical work, which, requires millions of dollars. We've advanced environmental work. So that money is well spent and it's still there. And when metal prices and investor interest come back to move mining companies forward, we've got a ready-to-build project. So, it's a bit of a waiting game to let the markets move here.
Okay. I know you answered this already, Jim, but maybe just for the benefit of the person asking, can you just talk about the critical mineral grants? The question is, do you qualify for any of the critical mineral grants?
Yeah, well, we were accepted for one of the grants, but it's literally less than $100,000. When it takes you can spend $500,000 on a drill hole. So the critical mineral grants are not game changers; they're not material. And some of the previous money that was available in programs last year are geared for larger companies. And so I'm being critical of the government programs here. Some of the critical mineral funds required you to put it in about 4 different hands. And when I say that, you had to engage research organizations, you had to engage First Nations, so these are really, when we have basically a 4-person management team plus some hired contractors, we don't have the depth that some of the bigger companies do in order to run these programs with the universities and research organizations and innovation funds. So it really isn't geared to help junior companies, and it's going off and doing research when we're actually just trying to put holes in the ground and do some drilling. So the government programs to date have not been designed to help the junior industry at all.
All right. Well, I think that's it for the Q&A portion of the webinar. Jim and Mike, thank you very much for taking time to host this webinar with us today.
Thank you.
Thank you.
Just as a reminder for our audience, our next webinar will feature Lumina Gold, and that's tomorrow, May 22nd at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.